Okay, Benson, go ahead.
Okay, my question is on the GU actually.
Yes.
Um, okay, at the moment in GU, I was in this trade and it got a particular place and I thought it was going to retreat, cover some FVD. After which, that didn't happen, although emotion got in my way and I was able to close the trade. So I want to know actually if at this moment, at this point, if is it possible for us to get the retracement? Like 1.8 feet or thereabout on Julia. Thank you.
Okay, sure. So are you talking about this fair value gap over here?
Yeah, exactly.
Okay, please don't draw on my screen. But are you talking about this gap here, hey?
Of course, yeah.
Okay, so if whoever drew on my screen can just remove that, please. Okay, regardless. So you want to know if price is going to retrace back to this fair value gap. Well, this is still a fair value gap that price is imbalanced. And so it shows that this is also a fair value gap over here. So price needs to retrace and close this gap over here and close this gap over here. Whether or not it will happen this next week is regardless. It needs to happen at some point. So if we look at the daily chart, you can see that this fair value gap on the daily chart has been closed over here. Benson, do you see that?
No, I said that.
Okay, so we can also see that this order block has now been introduced because it hadn't been used. This order block here has not been used yet because you can see price rallied from this order block and price only came now to this order block on Friday. So we can, saying on Monday, expect price to start retracing. Whether or not it's going to close these fair value gaps on this 4-hour chart here, that's not for me to say because I'm not obviously a market maker. So if we see price on Monday, if we start to see a retracement up over here, it is very likely that we can see price coming into this fair value gap over here. Okay, and when price closes here, so two things can happen here. Either price can wick into here and then reject down, because not only do we have this fair value gap to be closed, there's also an order block over here, a bearish 4-hour order block. Okay, so it is very likely that price may touch this order block and close this fair value gap and then continue downwards. Okay, but we need to see price staying above our institutional levels in order for that to happen. So you can see over here that this order block sits on an institutional price level of 200, right? So remember in my videos that you want to see price closing higher. So even though if price touches this 50% of this order block here, so the 50%, halfway of the order block, we can still see price come back down from that level. We need to see price continuously close higher in order for it to continue its move upwards, because it's very likely that it will just retrace and then go down more. Because if we look on the daily chart, there is still room for this order block to be tested. So price can still come into our daily order block, our 50% level. And if we look here, that this is also an institutional level at
Sure.
50%. So this 800 level of this daily order block here is an institutional level of 800. It's the 50% of the order block, and it's a daily order block. So daily order blocks are very strong when you compare them to just a 4-hour order block. Okay, so you can see that there is also on the 4-hour, price can come to this area and retest this area because this is a 4-hour fair value gap. So there is an imbalance in price. So if in the event on Monday, the market opens and instead of price retracing, price continues down, we can expect price to continue into closing this fair value gap on the 4-hour. Okay, so we trade price action. We don't predict what the market will do. We have confluences, we have confirmations, and we need to wait for price action to tell us what it is going to do. So if we see a retracement, well, then it's very likely they're going to test this 4-hour order block, this bearish order block at the top, closes 4-hour fair value gap, and then we can see price closing below our institutional levels and respecting this 4-hour order block in order for it to continue downwards. If it doesn't and it continues downwards from Monday, then this scenario at the bottom is very likely that we will see reaction off this 4-hour fair value gap. And you can possibly even say that this daily order block can still be respected, because what can happen is price can wick into here, but still the candle will close inside of our gap over here like this. So price can even still close inside of this daily order block, wick into this fair value gap, and then continue upwards. Okay, so there's no ever a sure thing in the market, because if everything was a surety, then there would be no uncertainty. And obviously, there's no 100% of anything, and we can only predict anything that happens in the market with only an 80% certainty. So there's still that 20% of uncertainty. Okay, so we follow price action. So based on that, it's either up, retrace into the fair value gap, test the order block and continue down, or come into our fair value gap over here and then test our fair value gap at the bottom and retrace from this daily order block. If we look on the weekly chart on GU, this fair value gap was closed here. You can see this past 2 weeks, the fair value gap here was tested, closed, and there was a weekly order block over here. Do you see that? So there's a strong weekly order block on GU.
Order block.
Exactly. So when price fell from here, it created this order block, okay? And price came up and retested this order block. And why did it drop where it did? Well, there's a whole bunch of orders, bank orders, sitting inside of this weekly order block here, and price fell from that order block. Do you see it basically almost touched the opening candle of the order block? So generally we take orders or sell them, it's at the opening of the candle or the 50% of the order block. So if we were following the weekly chart, we could have sold in that area, and you probably would have had a very small stop loss if you were to swing down from this area at the 50%. So that top of that candle, 30 pips, not bad. Good trade, and you would have been running 400 pips if you trade off a weekly chart. And one can trade off the weekly chart. It's up to the trader's discretion as to what time frames they are looking at, because everyone is different. So the person next to me might want to be a swing trader, Henry might want to be a scalper, and I want to be an intraday trader. So everyone is different, everyone's trading is different, and it's just to the taste of how we want to take our trades. But that would have been a perfect setup for anyone that follows the strategy. Sorry, that's a very long answer, Benson, but hopefully that helps you.
Yeah, it's very explanatory. Thank you.
Does anyone else have any questions?
Hi, Darren, Sean.
Hi, Sham, how are you?
I'm good. How are you doing?
No, can't complain, thanks. Go ahead.
Yeah, it's again about gold. Can you open the...
Sure, I have it here for you because I'm new.
Yeah, the order block really saved me this day because the daily order block and the fourth hourly order block gave me a bullish continuation, and I was on the buy mode over here. So I just want to know what would be the next move, because over here it has made a daily order block where it's going to be engulfing the entire thing, as well as...
That's the recent one. Are you talking about this order block here?
Yeah, exactly.
Okay, so that's a bullish order block, you're correct. And if we look here, that all of these orders are encapsulated still in this order block here. So this order block here encapsulates everything here, this daily order block. Okay, so because this order block was created, we can expect move to the upside. But until price can close outside of our order block here, so on this level here, until we can see a candle close above there, I would not buy for a swing. You could take, sure, intradays and catch like 100, 200, 300 pips. But for the long move upwards into, say, let's just have a look here, pushing $1,800, we can expect that if price is to close above our order block here. Because this order block has been respected for a very long time. So this order block, this bearish order block, was created on the 14th of the 4th. So that's all the way beginning of the year. And you can see that now price is approaching that order block. Not to mention that we also have a bullish order block over here. So this is also a bullish order block. So it took 2 candles to take it out. But when price is to come into at least the 50% of this order block here, we can expect a bounce off of this order block. So if an example, on Monday, the market opens and all of a sudden we see a retracement, it is likely that we will see a retracement to that zone on the 50% of this order block. And that is also a fair value gap over here. If you look closely in that zone, there is a fair value gap on the daily chart. If we zoom in here, we will see that this is a fair value gap. I'm just going to make it purple. So we can see that this is a fair value gap sitting over here. So the imbalance in price, we have a order block created here, and this is basically the 50% of the order block we have marked up here. So actually, let's get the exact 50%, which is round about there. So, but this fair value gap will at some point likely be closed, whether, like I say, it's this week or next week or 2 years from now. When this gap closes, we will have reaction. Okay, so that is the fair value gap. So if you see price heading down, expect for a buy at that zone, because when price becomes balanced, well, then they will get in on the buy, the market makers. They will just add to their position, because what is an order block? An order block is a block of orders that traded through a down candle. So here, this is a bullish order block because this bearish black candle here was traded through. So the banks, the institutions will not want price to come and close below this order block, because they want to protect their price that they bought at. So in the event of that happening, they will bring price down and then just add more positions to their orders that they have created at this. That is the purpose of a fair value gap, is to allow the market makers a second opportunity to get a discounted price at a better price. Because why would a market maker buy at 17.42 when they can push price down and buy at 16.98.
Which is more profitable.
Exactly. And then all they'll do is they already have a whole group of orders here. And sure, they'll have a bit of equity reduction because of the drawdown, but they don't care. They've got huge amounts of equity. So they'll have price come down and then price can rally back up here. So we could even see that price can wick in and then just close above our daily order block here. Obviously, you don't want to see price close below this daily order block here. You want to see price stay inside of the daily order block that was created over here. Okay, because we can see that price, this order block here, this order block that was created, you can see how price has reacted off that order block. Do you see that? So this wick that came in here wicked off of the body of that order block. So if you were in a buy from this order block here, you would have had a very good trade over here for 300 or so pips. So that is a good, strong order block, and we can expect a fair value gap reaction, whether it's this week, next week, 2 years. At some point we will see that, but we want to see price remain either for a bullish scenario inside our daily order block, bullish order block that was created for a bullish scenario. And if we are to see a bearish scenario, then this long order block that has stood the test of time will need to be, price must stay inside here. It mustn't be violated. So obviously if we see a candle close, say above here at this zone, then obviously this bearish order block has been violated, and then we just buy based on the price action on lower time frames, follow the order flow.
Yes. Darren, can we go on a fourth hourly chart for the same?
Yeah, sure.
Yeah. So I'm expecting a sell from there. Because it has to retake the that it has made over here.
So if we can see here, remember what I said about liquidity, okay? So I think I covered this in a previous weekend where there is liquidity created here, okay? So all of these areas here have liquidity sitting at these areas. So all of this is liquidity. Stop losses, SPY stops, that is all liquidity. And at the top here on this 4 hour is a bearish order block at the top here. So this is a bearish order block at the top. So we can mark that up as red. And if we look close enough, there is a fair value gap still here that closed some of the fair value gap. I think I've mentioned this before, that this fair value gap was closed up until that point there, okay? So there we still have a fair value gap. So what can happen is this high can get raided, this high can get raided, this high can get raided. Price can come and wick through or close above. And when it gets to our fair value gap close, our 4 hour order block, we can expect a reaction off of that, because not only do we have a daily bullish order block now created, we have a 4 hour order block. But obviously a 4 hour order block is weaker than a daily order block, okay? So the daily order time frame will tell us what is actually happening. So if we see that it comes here and reject or close, or you can see wick rejection, or you can see candles closing from this level, it is because of what I'm telling you here. So it is very likely that price will continue bullish for gold to take out this liquidity that is sitting here, because there is more liquidity sitting here than there is over here, okay? Because you can imagine when price came up here, it rejected down, okay? All the way down. When price came back up here, more retail traders, institutions would have sold here, okay? So there's a lot of liquidity here. Then price rallied down, breaking all of these lows. So all these lows were broken, okay? Into this area here. Then price rallied back up and rejected and failed to close above this area here, okay? So more sellers would have sold at that position, thinking that this is resistance, retail resistance, okay? So that is now a liquidity pool sitting over here, okay? So we've got 1, 2, 3 liquidity pools that have not been raided. There's no price that has come and closed above or wicked through it to take out this liquidity. So it is very likely that because the market runs on liquidity, we will see gold pushing to take out this liquidity.
Uptrend.
Well, yes. So if you see here, although there's 4-hour fair value gaps on these candles here, the liquidity take on these highs is more than this fair value gap. Okay. So even though on the daily, there's that fair value gap down at the bottom here, it is further away than this liquidity on the 4 hours. So the path of least resistance for the institutions and the market makers to follow would be to just push price up more and then come back down to buy at a lower price. So they would likely want to take out liquidity and then push price down to buy from a discounted price. Take out the liquidity first and then come and take a buy up. So we can see something like this where price rallies up, takes out these 3 liquidity points, closes this fair value gap over here, and rejects from this 4-hour order block. And to close our daily order block, fair value gap over here, I think I said it was. This fair value gap over here. So if we follow price, we could possibly see something like that. So we would take out the liquidity, sell down to close this fair value gap so the market makers can buy at a discounted price and then only go for a rally.
Got it. Thank you so much, Dan.
Okay, sure, no problem. Anyone else got any questions?
Hello.
Hello, yes.
Yeah, can you explain on the EU chart, the daily and the hour?
Okay, sure. So if we look at EU, I saw on the group that some people were stopped out on their trades, but if they had been following the bearish order block and the institutional order flow, they will see that this is a 4-hour order block, bearish order block. Then again, when price rallied into our 4-hour order block, where did it rally into? This fair value gap over here. So this was a fair value gap over here in this area, and price wicked into our fair value gap. If we look on a closer level, we will see that this here was a fair value gap because this wick up here would have closed the majority of this fair value gap. So this retracement up here closed the majority of this fair value gap, but there was still some fair value gap left as a remainder, okay? And then when price continued downwards and retraced again, this order block was at the close of this fair value gap. So we had a bearish order block and another bearish order block on the close of this 4-hour fair value gap was created, okay? Then price continued down and created this 4-hour fair value gap over here, and also this fair value gap over here, which closed or yeah, 100% of this fair value gap was closed with this wick, and then price continued down. When it continued down, it created another bearish order block over here, and we can see when price fell from this position over here, it rallied back up. Where did it rally back up into? Our 4-hour fair value gap over here. I think I saw one, yes, over here, a very small fair value gap on the 4-hour chart. But price closed this fair value gap and wicked into our 4-hour bearish order block and took price again to the downside. And this is a strong order block because of the fact that it was able to take out this zone over here. So this was the recent bounce of EU, creating market structure, and this order block destroyed this market structure over here. So this is a strong order block. Okay, then price rallied up, wicked off for 12 hours. So 1, 2, 3, 4-hour candles, could not go above. And if we look here, this is likely a a IPL level of 500 over here. You can see price could not continue above our 500 level over here, and price then fell off, destroying this structure over here again. So this structure and this structure is basically the similar level, and you can see that it is also a 4-hour bearish order block over here. So this is also a 4-hour bearish order block. So price rallied down from our 4-hour order block, off this 4-hour order block, rallied down, retraced back up into our 4-hour order block right here. So why is it doing this? Well, it's simple. So when banks sell or institutions sell, they sold, then price rips, goes down quite hard. They will then bring price back up so that they can buy at a discounted price or sell at a premium price. In this case, they sold at a premium price. Okay. Then price fell, rallied back up, so they could sell some more. Price fell down, rallied back up, so they could sell some more. Price fell down, rallied back up, so they could sell some more. Price fell down, rallied back up, so they could sell some more. And that is the move that we see here. A lot of people got worried as to what EU is doing, because they saw this massive 1, 2, 3, 4, so 16 hours of bullishness. And we can see that it just took 1 to 8 hours to trade through this whole area here. So what we can essentially say is that all of these green candles has created ourselves a bearish order block, because this was traded through just like that. So because of that, and because we still have this fair value gap over here, and if we measure the distance from here to here, that is 135 pips, which costs a lot of money for institutions to push price even 1 pip. So the path of least resistance is just to continue downwards. So if we take a look, we zoom out here, where has price come to? Well, we can see that here is a fair value gap that price is potentially heading to. So it could be likely that we will see a gap, a market open gap, from the difference of price when it opens on Monday. So 1766, and you might see a difference in price by a couple of pips, either to the upside or to the downside. They'll close that gap and then trade down. But let's look at the lower time frame on EU. We can see that there isn't much fair value gaps that have been created. This was a fair value gap when price traded down, and this wick closed this fair value gap. And if we look on lower time frames, there is a very small fair value gap on the 30 minutes. So if we do see a retracement on EU, we can expect price to retrace from our fair value gap if it touches this fair value gap. If it doesn't touch this fair value gap, well, price is just going to continue to go down, and they will be targeting this zone over here, which is our fair value gap. So once this fair value gap is closed, we can see some sort of reaction. But we can also see additional fair value gaps over here on EU, where price is going to target at some point. So we will expect price to continue at some point to our fair value gap, but obviously it's going to chug along. It's not just going to drop all the way to infinity on Monday. We will see retracements up and down for second opportunities to buy and sell. So that is where I see price going on EU for the daily chart. And if we look here, this was traded through. So these are bearish candles, and we can see that there was 3 of them, and it only took 2 candles to basically close out these 2 bearish candles. So this is a order block on the daily time frame. Okay, so we can expect price to close this fair value gap and react off of this daily order block that has been created on our daily chart for EU. And let's just mark that up as blue and look at the lower time frame on the 4 hour. And if we look here, so that is our fair value gap on the 4 hour. So this is a very reactionary zone on EU when we get to our institutional level of 800 over here. Oh, sorry, 500. So this would be a very high reactionary area on EU. And I do think price can continue to go down to this area. So this is a daily order block, and I do see reaction off of this order block, but I also do in the longer term see price heading to this point over here, because there is an imbalance in price and there is liquidity sitting below this low. So you can imagine how many stop losses are sitting below that area. So we might see price react heavy off our 8,500 level on EU on the daily time frame. As for the 4 hour, like I say, let's wait for market open on Monday, but this fair value gap immediately needs to be closed. And then after that, we might see price consolidate and then again target the second fair value gap over here. Does that answer your question?
Yes, sir. Thank you.
Sorry, the long explanations are the best way I can explain to you. Just telling you up or down, it doesn't work for me if I tell you up or down, because then you won't know what is actually happening on the chart. So that is why I give you such a long explanation. We've got a few minutes left of this session. Does anyone else have another question?
Okay.
Hi,
Good day,
yes.
sir, Mr. Doran.
Manuel, yes.
Yeah, I wanted to show a markup on UJ. I actually took it
On UJ, okay. We've got a few minutes left. Let's look at it. On you wanting to know about the daily order flow, or the 4 hour, or any specific time frame? Or I'll just tell you the overall picture.
It's a 4 hour time frame, sir.
Okay, so this is the 4 hour that we're looking at, and if we see here,
That block.
if we had, yeah, this order block here, this large one here at the bottom. So this is a bullish order block, and we can see price traded up, and now it is currently testing the 50% level of this bullish order block over here for UJ. And if we had followed the institutional order flow, we will see that this was the last strong order block before the down move. So this is our breaker over here. So we mark this up as our breaker, and we can see price has come above our breaker and now retested our breaker over here. So we can expect a reaction for price to go up from here. And if we look at the daily time frame, a closer picture, we will see that this order block has been created on the daily chart over here. So let's just mark that up in blue, and this is a daily order block. So that is a strong indication that price can react, and another order block over here at the bottom for the daily. So this is a daily order block over here. Price reacted this level all the way to the top, and when it came back down, it reacted again off this order block, creating another order block. So we need to be patient. The call is going to end now, but we should see a move to the upside based on the 2 daily order blocks and the fact that we have a breaker created for our bullish order block. It is traded into the 50%, closed this fair value gap over here that was created with this price action, and we should see a bounce to the upside for UJ based on the daily and based on the H4 time frame. Junior